Jazzcast Pros. I can't tell you how many entrepreneurs I've met who are doing everything right. They're getting the clients, they're building momentum, they're growing their reputation, but then they hit a wall. Not because they're not capable, but because they don't understand how to access capital. Welcome back to Elevating Enterprise, the podcast that takes a 100,000-foot view of success and gives you the elevator access to get there. And today we're pulling back the curtain on SBA lending, what it really is, how it works, how it can help you start, stabilize, or scale your business. I'm your host, Jazzy T, along with my co-host, RJ Williams.
Hello.
Our guest today is Mary Stone. She is the Senior Vice President and SBA Manager at M&T Bank. Welcome to the show.
Hey, everyone. I'm so excited to be here. Thanks for having me.
Of course. We're so excited to have you as well. Can you start off by giving us your elevator pitch?
Sure. I am Mary Stone, and I am proud to support M&T Bank as the SBA Small Business Administration Lending Manager. My team supports small businesses across the communities we live and serve gain access to capital to grow their business, open their business, or restructure their business. I am incredibly passionate about Main Street America, but even more importantly, Rochester, New York, and the community I've had the opportunity to grow up in.
Awesome.
She's being modest there. She leads a team managing more than $700 million in SBA lending. Okay.
We are a strong team. Thank you.
Yes. I mean, you help small businesses get the funding that they need to grow. And so start off by explaining what is an SBA loan in simple terms.
For sure. And, we hear all about SBA lending across news outlets, right? On LinkedIn, wherever we might be. And there's tons of different types of SBA lending. But I'll start with focusing on the most typical SBA loan, a 7A loan. The 7A loan is a tool that lenders may use to provide access to capital for small businesses that may not otherwise qualify. And that's because there's some type of inherent risk factor. So that inherent risk factor might be length of time in business. So think your startup businesses, right? That's inherently risky. We see high risk industries. So think your mom and pop grocery stores, bars, breweries, restaurants, right? Those inherently risky businesses. And then we can use that SBA loan to mitigate the risk of a lack of collateral. So many of those higher risk businesses lack collateral. Think your restaurant, right? We've got some tables, chairs, maybe a few freezers in the back, but there's not a true collateral associated with the loan. So what lenders will do is obtain an SBA guarantee. The SBA provides the lender a 50% guarantee or sometimes a 75% guarantee on that loan. So I always give my simple example. I'm not a math person. $100,000 loan. If something goes wrong, the bank's at a credit loss of $50,000 and the SBA swoops in and supports that at $50,000. So the bank can get comfortable with that riskier loan.
Excellent. And you say you're mitigating some of the risks for those to become eligible. What are some of the eligibility terms? You say a startup, obviously they don't have the track record, but what would spark the interest of M&T in your program?
We can support clients at any stage of their business. So that might be at the startup stage. It might be at the expansion stage. It might be at time of refinancing, right? To restructure the business and create more space for capital. Might be to buy a building, right? And truly become a brick and mortar business, right? And invest in commercial real estate. So at any phase in the business's life cycle, it might be the right time to engage. Here at M&T, we're a top 10 lender nationally. Although we operate in only 12 states, we're a top 10 lender. We provided over 2,700 loans to small businesses through the SBA program last year, almost $300 million. We're really proud of our program, and I have the best team in the business. I'm confident to say that. So we know what we're doing over here when it comes to SBA.
So taking it further, what is the limitations? Is it the range of threshold? Is it 5,000, 10,000, up to how large?
Great question. So here at M&T, we start at $5,000. technically there's no lower limit, right? But we
Right.
start at 5,000 and we go up to the SBA lending cap at $5 million. So
Oh,
we're
okay.
producing loans anywhere from a $10,000 working capital loan to a $5 million loan to acquire a large scale business.
So what kind of expenses can these loans cover?
There's so many different ways to utilize the proceeds from an SBA loan. So a business can use the proceeds to start up their loan. So think your small dollar costs, getting your place furnished, right? Fitting up your place. So improving your place. And we can finance improvements to a leased space. That's absolutely acceptable. We can support equipment purchases from small dollar equipment to large affixed equipment. We can support commercial real estate purchases. We can support business acquisitions, which is a common use for an SBA loan. So what that means is, let's say, RJ, you're retiring and I'm buying your business. I can acquire an SBA loan to do so and finance that business acquisition. So there's tons of opportunities. I don't think I said debt refinance. We talked about that a little bit, commercial real estate, but anything you can think of, most likely an SBA loan can support that need.
So as you were mentioning, like real estate and equipment, things like that, is that under a different program from 7A?
Great question. So there's a couple of programs that can support those real estate purchases. We can absolutely use 7A to support real estate, but the SBA has another loan program, which I'm sure many listeners have heard of, the 504 loan program that supports real estate. That program is a little bit different. Those guarantee percentages don't come into play. But what happens with that loan is the lender will provide about 50% of the project financing, and a certified development company, a CDC, which acts on behalf of the SBA, will provide 40%, and then the borrower will put in 10 to 15, depending upon the nature of the building. The benefit of those 504 loan programs is there can be lower rates than traditional lending, longer terms, and even additional benefits when it comes to taxes.
That's great. Just staying on here on this range of talk, because this what applies to most people. What are the requirements? Say a $5,000 ask, is that a lower amount of paperwork opposed to the $5 million ask?
First, I want to talk a little bit about, and I know, Jazzy, when you and I first connected, we were talking about resources in the community. So before I dive into the specifics, we are so lucky in Rochester, New York. We have so many community organizations that can help businesses prep for the documentation or submission requirements when it comes to an SBA loan. So anything from a SBDC, Small Business Development Org, to chambers, or even our local SCORE representatives, which are volunteers that help businesses prepare for SBA financing, can help small businesses prepare that documentation. Your banker can help you prepare that documentation. My team helps clients each and every day ensure they're ready for submission and approval for an SBA loan. So no listener has to feel alone in the process. There's so many resources out there. But long story short, generally speaking, loans $500,000 and less, here at M&T, we use the Express program, which is just that, Express. So there's less stringent documentation requirements and underwriting requirements for those types of loans. And we'll use the full 7A loan program for loans 500 and greater. That's a general benchmark, and each lender differs, but there's definitely differences when we look at dollar amounts and documentation required.
Fantastic.
So, Mary, you mentioned all these different resources that are around, and I know M&T is very strong in the community. Is there one place or portal that you point people to?
The best place to start is SBA.gov. The SBA website has a lot of great resources. We've used so many program names today. I hope everyone can slow me down to lower speed. And I know we're talking about a lot, but the SBA has a loan chart right on their page that breaks out all of these different programs we've talked about and the ins and outs. So it's a great reference for folks. When we talk about Rochester specifically, engaging with a knowledgeable business banker or branch manager is the best place to start. Those branch managers or business bankers will have the correct contact, a list of contacts for you local to the area you're in that can support you, whether it's a representative at the Small Business Development Corporation, a SCORE volunteer, or even connecting you with a member of my team to have a preliminary conversation. Starting with your local lender is a great place to go.
One of the newer SBA initiatives is called the Mark Loan. So can you explain what Mark is and how it differs from a traditional SBA 7A or 504?
My gosh, Mark is the word on everyone's radar, right? So I'm so glad you brought it up. The Mark program is another acronym. It stands for Manufacturers Access to Revolving Capital. And it is just that. It's an ability for manufacturers to have access to a larger scale amount of working capital to grow their manufacturing firm and expand its operations. So what it is in reality is a large dollar working capital line of credit, so revolving line of credit, and it can go up to that $5 million benchmark that the SBA has. So we had an example come through last week. A manufacturer is looking to scale its business. They've obtained a few newer contracts, but to make those contracts a reality, they'll have to purchase supplies and additional staff and fund additional staff up front. They just don't have the capital to do so. So by providing them Mark financing, we'll be able to give them that benchmark, that leeway to gain access to capital, complete that project, get that contract paid out, and then be able to continue to scale their business. So it's a great opportunity for manufacturers looking to grow. Most manufacturers are eligible. It's driven by how taxes are filed. So your local banker can ensure you're eligible for the Mark program. But I'd love folks to engage in some of the materials the SBA has. It's an exciting opportunity.
And just to go further with that, I am working with a couple manufacturers right now, and I want to follow up with you on that. But when you say, I guess, one working capital for growth, what has been the average just coming in front of you? What type of companies have come into, and what stage are they in?
We're lucky at M&T that we support businesses of all different sizes and all different stages in their small businesses. But I will call out our average loan size last year. So if we take all 2,700 loans we did, our average loan size was $110,000. So our bread and butter is that small dollar business. But that doesn't mean we haven't done plenty of $3, $4, $5 million deals. So we'll see clients coming forward looking to scale their business, start their business, or commonly, as we've seen over the last couple of years, mom's ready to sell her business to her daughter and son and retire, right? So we're seeing that succession planning coming into the play as well. And that's really exciting to see.
So say I had a manufacturing rep that's needed maybe $500K for some of their expansion revolving credit, because I'm thinking of somebody right now.
Love it.
What would make them eligible for this?
We look at a few things, and this is super high level, right? But first and foremost, we want to look at the cash flow of the business and ensure that the business can support the lending, right? We always want to set businesses up for success. So by looking at historical financials, or in the case of a new business, projections, we want to ensure the financials make sense for the lending, and the borrower will be able to support that and succeed. We also look at things like the business plan to understand their operating model and ensure it aligns with what we'd expect in that type of industry. Then there's other eligibility requirements that come into play when it goes with SBA lending. So I'll take a step back. The SBA operates off of a over 400-page SOP, standard operating procedure, and that's what my team reads and looks at day in and day out and helps borrowers ensure that they're eligible. So anything from citizenship requirements to ensuring that the client has met the small business standard, right? There's a size standard for SBA loans.
And what is that standard? I'm sorry to cut you. What is that standard? Because that's important.
No, great question. It's driven by industry. So driven by that NAICS code, which is the industry identifier on tax returns. So each NAICS code has a unique identifier for size standard. Right on the NAICS code website, we can find that information.
And I just want to point out too, because as people are going from solopreneur, small business owner, medium enterprise, that little term SOP keeps popping up, right? Even at some industry events we were at just this week, it comes up again, right? No matter what size, like, I really need to get some stronger SOPs. So I just want to point out that the SBA has a 400-page SOP. Just wanted to throw that out there. So if anybody's thinking, do I need a one-pager? At least one page.
And I'll tell you, I'm so proud. Here at M&T, we've put together some really nice resources that are 5 to 6 pages long for small businesses, slimming that down. Hey, here's the highlights of what you need to know out of these 400 pages.
And then, Mary, can you go over what is the average, approval time, like for the $5,000, which most small and solopreneurs may be eligible for, and then for maybe the $500,000 loan and the $5 million? What is the time constraint there?
It's a great question, and it's everyone's favorite question. So,
well, that's what they want to know.
When do I get my money?
And they should know, right? Time is money. So it all depends on a few things, right? First and foremost, it depends on the lender. So I'll call out M&T Bank is a delegated lender. We are under the PLP, Preferred Lenders Program. Mm-hmm. So what that means is we can approve SBA loans in-house. We still obtain that SBA approval through the SBA system, but we're able to ensure that the loan is eligible in-house. We have that authority. So that cuts down on processing time because we're not sending documentation to the SBA directly for their review. So that's an important thing to understand when you're engaging with different lenders. But average time frame truly depends on the use of proceeds, right? When we think of a working capital loan, there's not much additional documentation to collect. We understand what the working capital is for, have those conversations. But when we're engaging with commercial real estate, we'll have to obtain an appraisal and potentially an environmental assessment of the building. And those assessments can take 2 to 3 weeks, right? So every turnaround time isn't perfect. Here at M&T, we utilize DocuSign software. So we're able to send the client a DocuSign package, sign off. So my favorite success story I like to tell, we were doing a working capital deal for a client who was in active military. He had to be deployed for an onshore training for 2 weeks. So he was away from his desk for 2 weeks. We sent the DocuSign. He was able to sign while in the field at his training course and be funded for his working capital well away. That took about 5 business days. So I love that story.
Wow.
We celebrated him on Veterans Day internally. We had a nice little blurb, but that was a quick turnaround deal. But some deals can take lengthier if there's additional due diligence, like property searches. Yep.
Right.
Well, that's always nice to hear about a success story, but not everyone gets approved, right? So what are some of the reasons that a business may be turned down for an SBA?
Jazzy, you were perfect with the transitions. Oh my goodness. Absolutely. Great question. So turn down reasons can first and foremost depend on a bank's credit policy, right? So the SBA has guidelines, but lenders do as well. So there isn't a perfect answer, right? It depends on that lender's credit appetite. But generally speaking, cash flow can be a reason for a decline, right? We wouldn't be able to offer lending to a borrower that wouldn't be able to pay that loan back based on historical financial data or projections. Another common reason can be personal credit score, right? So many lenders use a scoring model for smaller dollar deals, and without a strong personal credit score, that can be impactful. So the first thing I say to borrowers is, how is your credit and how are your projections looking or your business plan looking? Have you worked with someone in our community to ensure that those are up to date and ready to go? What I also like to do is myth bust. What isn't a decline reason? We hear declines regarding length of time in business. The SBA is absolutely open for startups. Now, some lenders may not be comfortable lending to startups, but here in M&T, we absolutely support startup lending, and that would not be a decline reason. Another reason that would not be a decline reason is lack of collateral. The SBA is here to support businesses that do not have strong collateral. Think your inventory-based businesses, your bars, restaurants. The SBA is here to support those types of businesses as well.
I think when she says that a lot of people are kind of looking in their own mirror, trying to find excuses why something might not work. But I think she said it best. Go sit down with SBDC, some of the resources, make an appointment with her so they can give you an analysis of what what your mirror really looks like. And in that way, like she said, she can give you some guidance on how to make those improvements and become eligible eventually.
Absolutely. Your SBDC, your banker, we're here to support and make sure you're ready for lending or ready for a different kind of lending, whatever your situation might be.
So I was going to ask, can a business reapply if they're denied?
Great question. And the answer is absolutely. It's important for the business to understand what that decline reason was, right? So let's say that decline reason was a personal credit score. That business can work on that personal credit score, right? Engage in opportunities to improve that credit score and reapply in 6 to 9 months once that score has approved. We see that often. Absolutely.
And you mentioned something, we actually met Mary. She was doing a presentation for GRABA, so the Greater Rochester Black Business Alliance. And you brought up something about if somebody had an SBA loan previously, maybe didn't take care of it so well, talk about that scenario a little bit.
Yeah, great call out. So one of the eligibility factors when it comes to SBA lending is the client cannot have any past due federal debt or defaulted federal debt. So we see commonly if a client had obtained an SBA loan previously, maybe a PPP loan that was under the SBA program, and defaulted on that loan or have a past due balance, that has to be rectified prior to obtaining any additional SBA financing.
And I'm glad you mentioned BPE because I don't know if a lot of people have heard of PPE, might not have connected it to SBA. So if you had a PPE, make sure that that's all on time, not overdue, and all that stuff is in good standing before you enter that conversation, correct?
Those PPP loans, I don't think we'll ever hear the last of them, right? We had a lot of funds supporting our small businesses in 2020, 2021, but absolutely, those were SBA loans. They fall under the disaster program of SBA financing, so not 7A, but lenders supported small businesses all throughout the pandemic with those PPP loans.
And just to get clarity, so if they're not in default, but they still owe a balance on that loan, do they have to pay that balance off first to reapply for
you
a
can
new
have
one?
multiple loans with the SBA as long as they're all up to date.
Yeah, they just can't be in default or anything like that.
You got it.
You got to be brought up to speed. Okay.
And I just want to give a shout out to your colleague, Melissa Jordan, because she was on Elevating Enterprise a few episodes back. But you talk about how M&T was there to help customers through the pandemic, just calling and checking in. And I thought that was great. And one of the reasons that here at JazzCast Pros, we do bank with M&T because of that personal attention. So if you haven't already, please go check out the episode, Bank on It with Melissa Jordan from M&T Bank as well.
Yep. Shout out to Melissa. She's been a great advocate.
I am lucky to call Melissa a friend, colleague. Sometimes I call her my work mom, but Melissa is top tier when it comes to supporting her clients from start to finish, anything they might need, not just navigating lending, but other needs they might have. You guys talked about fraud in the podcast, right? And navigating how to protect small business against fraud. So absolutely worth a listen. And she's the perfect example of a lender who can walk you through the SBA loan process.
Yep, absolutely.
So, Mary, I mentioned an event that I met you at in the past. Do you have any upcoming events or speaking engagements that people can connect with you in person?
Oh my gosh, I love it. So we're always out in the community engaging. Our SBA.gov page, so the general SBA page, if you search by zip code in their event directory, there's events hosted directly by the SBA. So small businesses can check that out and find an event that might speak to them. Oh my gosh. So every year, Jazzy is calling out, every year our women's group here in Rochester at M&T hosts a small business networking event. It is my favorite event of the year. It happens usually around August, September, and we invite all different types of small businesses to have booths in the lobby of our corporate office. We had over 20 businesses this year. I know Melissa is scheming to double the size of the event. So more to come for M&T's Women in Business Spotlight Shop here in Rochester.
We actually took part of that. We had a JazzCast Pros mobile podcast booth there, Ruben and I.
Cool.
And it was really cool. And the quality of the other vendors around, great networking if you decide to be a vendor, but absolutely come by. And it was free too.
Free. Absolutely.
So we thank you, M&T Bank and Mary specifically, all of the work that you're doing with SBA and getting the product and those general resources out to our listeners here at Elevating Enterprise. Is there one final thought or takeaway that you'd like to give?
I want to thank everyone for listening. I'm so incredibly proud to be in a role where I can support the American dream and help small businesses achieve their dreams and gain the access to capital they need. I'll leave listeners with, if you're worried or apprehensive to engage with an SBA loan, don't be. Find an expert lender who can help you gain that confidence, walk you through the process. And it is not something to be afraid of. It's a tool in your toolbox to scale and grow your business. And we're so lucky to have this opportunity.
Perfect way to wrap it up. I mean, you stole my outro, but one thing we really want you to take away from today's conversation is that SBA loans are built differently. They are designed to give you, a small business owner, a real shot at starting or expanding or just, making payroll or buying a property. It's also important to notice that there are so many people like Mary, like Melissa, right here in your area, whether you are in Rochester or Buffalo or across New York, right? They're willing to sit down with you, answer your questions, help you understand what's possible for you before you even start that application, right? So today's conversation is not just about funding, but about access to the guidance that is available. So if this episode helped you see financing in a new way, please share it with another business owner who's ready to grow, but may not know where to start. And as always, remember that success isn't overnight, it's strategic.